Hello again. I just want to talk about the overnight price action on the 9th of the 7th, 2015. Gosh, markets are certainly very interesting, that's for sure. Investors are still very concerned about Greece, and they are incredibly concerned about the Chinese stock market. The Greece drama still goes on, and the Chinese stock market was off about 4% yesterday. For the last 4 weeks, the Chinese stock market has fallen quite dramatically. In the last couple of weeks, it's been down about 30%, and in the last 4 weeks, it's been down roughly well over 50%. About a month ago, the returns for that market for a year were 148%, and now currently they're 73%. Yes, that's correct. Generally, when you look at the returns for a stock market, the indices are generally up about 20% per annum. So you can imagine just how much leverage at the moment is involved in the Chinese stock market. But let's just return to Greece at the moment. Greece last night requested a third bailout package from the Eurozone. The European leaders are very frustrated with Greece because they haven't come up with any economic reform packages since the referendum of no on the 5th of the 7th. They were supposed to come up with one on Tuesday, and now it's Thursday, and the European leaders are expecting some sort of economic reform. Cyprus did speak to the European leaders last night, and again there was a lot of frustration and a lot of passion from European leaders saying, look, there's nothing on the table, you've given us no dates, there's no reform for tax collection, for pensions, for the public service, there's no reforms in paying down some of the debt or even any ideas for economic growth. So there was a lot of interaction, a lot of passion from different European leaders in talking to Cyprus, the Greek Prime Minister. The Greek Prime Minister did say that of the 10% of the wealth in Greece, only 10% of the Greeks own about 53% of that wealth, and they pretty much have over time avoided tax. So the Greeks are expected to come up with some reform, some package by Thursday, literally Thursday or Friday. Cyprus has given 2 days to do that. And again, the European leaders will go through those reforms, and if they're in agreement, they will give them obviously some emergency liquidity aid, ELA, and also 2 to 3 year bailout program, which is effectively going to be money that will come from the European Rescue Fund, and which also comes from the European Stability Committee mechanism. Now, the reality is they're just going to give Greece more money, but then they will probably make the terms of payment a lot more lenient, because currently with the previous plans, it was just literally Greece just couldn't afford to do anything, and economic growth was terrible, and there was no income. And again, as I've said before, there's no medical, things are quite bad, food shortages and medical supply shortages and everything. So look, they really do need to come up with some reform package. And there's got to be some negotiation, reconciliation on Sunday night. If there isn't, and if there is no negotiation, no agreements on money, Greece really does run the prospect on Monday morning of the banks having no money, and there will be a full-scale banking collapse, which could be which will be an absolute disaster for the Greek government, but also for the Greeks themselves. So just looking at the Greece 2-year debt at the moment, their rate currently is at 57.28%. Yes, 57%, which is huge. A couple of weeks ago, that was at 34%. It's basically the cost of money. How much does it cost them to borrow money from anyone, the end investor? People are very concerned if they lend the Greeks money, they're not actually going to get it back. Now, if you compare that to, say, Australia, we're at 1.83% for a 2-year. Essentially, we're a AAA credit rating quality country, so we've got the best credit rating, and Greece has got the worst at CCC. CCC basically means the creditors are very concerned you're actually not going to get your money back. Now, don't forget, Greece owes the IMF and the European central banks around $3.5 billion, but probably about $5 billion this month. So there is a lot going on. Greece has been to the market just in the short term, trying to borrow very short-dated commercial paper and treasury bills, paying about nearly 3% on that, and that's very expensive just for 1 or 2 or 3 day funding. Given Germany, for example, is like negative 0.80%. So again, it's costing them a lot of money to go to the capital markets and to borrow money. So things aren't very good. If they don't come up with a solid reform package with calendar dates and timings to when they do things, the European leaders will probably say no to any more money. And this could be a disaster, and it could be a Greek exit on Monday. So look, Friday night and Monday are going to be incredible events and incredible times. So we just have to wait and watch and see what happens. Now, going back to China, the equity market particularly has seen massive decline in the last 3 to 4 or 5 days. Some days it's been down 8%, some days it's been down 4%. Today it looks like it's stabilising. It's currently up 1.3%, but yesterday it was down a lot, 4%, and the day before and the day before. The Chinese government has been in the People's Bank of China, which is called PBOC. They've come in, they gave $1 trillion or yuan of support. Didn't look like it was enough. They relaxed margin lending collateral, so people didn't have to come up with as much money when stocks were falling. They also allowed 40% or 1,500 companies to stop trading, to actually be off the exchange, so their falls wouldn't be so pronounced. And they've come in and basically banned short selling. They've also reduced transaction costs. They've said to directors you're not allowed to sell shares within a 6-month time frame, and they've actually said that no one can hold any more than 5% of companies. So they're trying to prop up this market in so many different ways, and they're also giving security providers more funding as well. Now, the Chinese market, the equity market, is very new to the Chinese. Don't forget, 85% of this market is retail money, so it's not institutional money, which makes it a lot more volatile than when you have institutional money, because with retail money being just the mums and dads, if the market does start going down, people really start to panic and really start to throw the kitchen sink at it, and everyone gets out in a rush. And this is pretty much what the Chinese market's doing. Everyone seems to be getting out in a big rush, and they're all following suit, and you're getting huge moves on stocks. Today we do see some stability, which is a good thing for the Chinese investor. But this may not have finished yet. So there has been a lot of panic selling. But it does look, when you look at the Chinese market, apparently compared to, say, the US or Australia, 1 in 15 people are invested in the stock market, whereas in the US it'd be 1 in 2, and in Australia I think those holdings are quite high as well. It's about 65% of the population, so nearly around half as well. So the Chinese, as I said, the Chinese, the stock market is new to them, and they're basically blaming the government for not stemming the fall at the moment. They believe that the government was trying to stop the market from rising as quickly as it did, and it did put certain things in place, restrictions, but now the Chinese people believe the government's not doing enough on the way down. So they don't seem to understand that with capitalism, markets do go up and they do come down, and theoretically, really, equity markets should be left to fall to where they go normally, not with governments and things propping things up. Globally, with the Chinese selling off so much, we did see massive moves in the Hang Seng yesterday and massive moves in the Nikkei. The Hang Seng was down the most it's ever been since 2008. I think at one stage it got down to 8%. Now again, this is Chinese that also invest in the Hong Kong market. Don't forget, some of the stocks in the Hong Kong market are also listed on the Shanghai Composite Index, so there's a bit of an arbitrage there. If one stock's at a certain price and the other one's the same stock at a certain price, you can either buy or sell one stock and sell the other, that sort of thing. We also saw the Turkish market down quite a bit as well, and one of the Turkish equities was slammed like 20%. So I guess what this tells you is stocks are very volatile and they are very risky. They're right up there on the risk curve. You can lose all your capital. And, if you get a stock that's falling more than 10% in a day or 20%, that's per day. If you annualise that, you've got to multiply that by 365 days. So you get an amazing percentage of negative. And, if you compare that to a term deposit, a 1-year term deposit in Australia is 2%, that's a massive negative. So, look, the reality is stocks are risky. When they fall hard and heavy, and you can lose all your capital. Commodity markets were quite volatile again last night too, and during the day. Iron ore fell more than 10%, which is seriously a massive move. 10%, gosh, that's big. It got down, it broke $50, and it's down around $44 US. So basically that was off the back of Chinese, which is our biggest buyer of iron ore. We export, Australia exports to China iron ore, and with the Chinese market selling off, there is a view that commodities could come even down further because there's going to be lack of demand in China for our natural resources. In currency markets, the Japanese yen was still bid. What I mean by bid is investors and traders are still buying the Japanese yen because it's a safe haven currency. So very bid against all the crosses. So for example, if you sold euro yen, it means you're selling euro and buying yen. If you sold US dollar against the yen, you're actually selling US dollars and buying the yen. So the yen's done very well in the last week or so. Interest rates have been down a couple of points. We do see that credit spreads, the cost of corporate debt, is moving out. In other words, corporate debt borrowers' spreads are actually moving out, which shows you there's a lot more risk in the market, and it shows you that it's costing a corporate more to borrow money in the market. And the Aussie US dollar, we've seen in the last week has been down about 3 cents, and that's off the back of commodity prices as well. So let's just see what happens. But certainly in the next couple of days of trading with Greece and China, it's going to be very interesting to see what happens. I hope this helps, and let's look forward to the next market report. It'll be very interesting indeed. Thank you.